Hi, my name is Alex and this is my dividend income channel. While building up your portfolio of dividend paying stocks, you occasionally get a dividend increase, which is always welcome. Enbridge have just announced a 3% increase on their dividend. This will increase for the next payment on February 15th, 2023. Enbridge is one of the oldest dividend aristocrats in Canada, having a 28-year streak of consecutive dividend increases. Enbridge have had a good year financially. I have spoken about them before in a previous video. What I like about them is their continued investment into renewable energy, a sector which is going to skyrocket. They have been building a low carbon portfolio, from starting a single wind farm in 2002 to more than $8 billion invested in renewable energy projects at the end of last year. Enbridge recently announced their first offshore wind project is now fully operational. Located between 12 and 20 kilometres from the southwest coast of France, the 418 megawatt wind farm will help support the French state's energy transition goals, which includes targets to generate 32% of its energy from renewable resources by 2030. Some other key data metrics from Enbridge: it has a market cap of $82.82 billion, there's a PE ratio of 19.22, which is great. It has a strong yield of 6.34%. What could look like a red flag is its payout ratio, which reads as 140% if you take its annual dividend and divide it by its trailing 12-month EPS. This would obviously not be sustainable. Yahoo Finance have delved a little deeper to show that that amount is much less. With Enbridge, it is more accurate to use the distributable cash flow, DCF, which gives it a payout ratio of 63 to 66%, which is much better, of course, and more sustainable. This is based on their guidance of $5.20 to $5.50 a share. Let's have a look at what the analysts think and what the price targets are. Bear in mind we've had so many global events that have affected prices. Take these targets with a grain of salt and do your own research. Starting with Seeking Alpha, they have a buy rating, 6 strong buy, 6 buy, 11 hold and 0 sell. Market B has a consensus of hold based on 6 analysts. High price of $60, so they see a lot of upside potential. Tip ranks have a moderate buy based on 10 analysts. Average price target of $43.75 with a high of $48.44. I think this is a more realistic price target. Enbridge dividend increase and recent purchases means this finally tips my average monthly dividend payments to $100. After the recent $1,000 year milestone, this one has really happened quickly, onwards and upwards to $2,000. I've recently started a new position in Stanley Black and Decker, ticker symbol SWK. It has been on my watch list for a while. I knew it had dropped in price, but didn't realise by how much. Shout out to Ari Gutman for highlighting the price drop. Ari has a great channel and I recommend checking it out. Stanley Black and Decker has plummeted in price recently from highs of 220 back in May 2021 down to the highs of 70s recently, which is nearly a 65% drop. I now think it is undervalued and provides a great buying opportunity, which I was more than happy to do. The Motley Fool think it's a bargain too. They point out the good points: a dividend king, part of the S&P 500, and that they have raised its dividend for at least 50 consecutive years. The bad points being they are vulnerable to consumer spending, they have supply chain challenges, rising raw material costs and labour costs. Earnings are only slightly higher than they were 5 years ago. The health of the company's balance sheet has declined, and the financial debt to equity and debt to capital are at nearly 10-year highs. This has seen investors sell off the stock, but it has now gone too far. The company is in the process of a reorganisation to cut costs and navigate prolonged headwinds. That, coupled with the highest yield since the recession of 2008 at 3.9%, means that investors can buy in at these low prices with a lot of upside potential. Stanley Black and Decker have been through cycles like this before, so I expect them to power through. No pun intended. Again, let's have a look at what the analysts think. Starting with Seeking Alpha, they have a hold rating, 3 strong buy, 1 buy, 14 hold and 1 strong sell. Market beat has a consensus of hold based on 13 analysts. High price target of $140. It would be nice if it gets that high. I think the average of $94.08 is more realistic. Tip ranks have a hold rating based on 9. Average price target of $80.56 with a high of $96. The analysts at Tip Ranks have a more conservative approach, which I tend to agree with. It gives me more chance to pick up some more shares over the next few months. The company pays a quarterly dividend of 80 cents. It's just gone ex-dividend on the 30th of November. I purchased just before this date, so I will be paid on the 20th of December. On top of this, I've been building up other positions. I've kept dollar cost averaging in on a couple of ETFs and continue increasing my position in realty income. December is now upon us. This is going to be my best month by far. I have 16 companies paying out in December. Christmas is coming early this year. Do you recommend any stocks that you think are in deep value territory? Please let me know in the comments. Thanks for watching. If you enjoyed the video, please like and subscribe. Here are a couple more videos you might be interested in.